bring in Jeff Pierce. Let's keep talking some notes out. And in Meta, I think we should start with the big cap, Jeff. Price target cuts, layoffs, more coming. But I don't know, layoffs have worked pretty great as it pertains to Facebook Meta's financial restructuring and year of efficiency.
Yeah, exactly. Year of efficiency. We've seen that work for the company so far. We are getting reports out of Reuters that Meta's planning to reduce their workforce again, though. The company is expected to do cuts from the Agile Silicon Team unit, which is part of the Reality Labs division. That unit's about 600 people in it. We don't yet know how many layoffs there will be, but this is likely coming from a couple places. This is the unit that develops those chips for augmented and virtual reality. And, reports have been that they just really haven't been able to make a competitive chip. And that's what we've seen. That's why we've seen Qualcomm come in and provide chips for their Quest and the Ray-Ban sunglasses as well. And then, as you pointed out, a year of efficiency is likely another reason for this. If they're able to find an area where they can cut some costs. Reality Labs, we know, is really the division that they're focusing on for the future. That's an area where, they lost about $13.7 billion in 2022 on just $2.16 billion of revenue. So that's an area where they are showing a lot of losses, and it's possible to cut some of that with layoffs. Okay.
So the cut coming with it, is that related, coincidence? It seems like the stock so far has given us no reason to think that layoffs are going to be a bad thing necessarily, that cleaning up the bottom line, no matter what it takes, is going to be a bad thing, because the chart still looks amazing considering everything that's happened the last couple of months. It's still off its July high like the broad market, but barely. We're talking $26, so a little less than 10% off its high. That's not bad, less than 8% actually.
Yeah, absolutely. What the company's been able to do in terms of cost reduction, in terms of seeing some of the ad revenue come back. And I think there is some excitement around their Quest headset, their Ray-Ban sunglasses as well. The price cut really did focus on expenses. JP Morgan lowered the price target to 400 from 425, kept that overweight rating on the shares. They said they remain positive Meta shares, but reduced their 2024 and 2025 earnings estimates primarily to account for increases in expenses. They said the biggest change in their model is they're increasing the 2024 total expenses from $93.4 billion to $97.5 billion. They think Meta is going to guide in a range of $96 to $102 billion. They did say, typically Meta is not going to comment on their forward year revenue in conjunction with their forward year expense outlook, but they think it's important to come away from those Q3 earnings report with a view that revenue can grow faster than expenses.
All right.